This is Special Focus, right here on Equity Access, your daily insight on stock market developments and on developments in the Zimbabwean economy. A splendid evening it is to you. I'm Ibn Mabunda. Let's roll. On agenda tonight, JSE listed Anglo American Platinum, which owns a controlling stake in Unki, today released financials for the year ended 31 December 2018. The group recorded a 14% growth to $5.3 billion, while operating profit grew by 64% to $752 million. This was driven by a 13% growth in the price of its basket of metals. Chief Executive Chris Griffith says that the performances were driven by great performances by Unki, Mogalakwena, Krundle, which saw the group's production increasing by 4%. In a production update, Unki Platinum said it recorded a 15% growth in production to 86,000 ounces of platinum. Well, Unki's production for the fourth quarter was down 2% to 22,000 from 24,000 ounces recorded in the previous quarter. This, of course, was in line with the local sectoral performance, which is mining, driven by worsening economic conditions in Zimbabwe. Of note is the fact that Unki reported that their $62 million smelter is now complete and is set to be commissioned later on this year. This, of course, is expected to create value for the corporation as well as increase their revenue contribution to the group. And Zimbabwe spent over $220 million on cooking oil raw materials imports. That's a huge figure. For conversation on these and other issues, I'm joined in studio by our very own investment analyst, Anesu Chimbumu. Anesu, good evening and welcome to the show.
Good evening, how are you doing?
Splendid, can't complain. Always moving forward. Now, let's cut to the chase. Amplatz releases its financials and revenues are up 14%, as well as operating profit is also up 64%. What are the major drivers of that?
All right, even basically these guys enjoyed some of what they implemented around their operational efficiencies, and this then pushed up their production levels. Also, coupled with their production levels going up, there were some good commodity prices that were experienced throughout the year of 2018. Of note, would realize that palladium, which was one of the major revenue contributors in terms of the 4E minerals, right, had a very good run in its price movements throughout the year. It had a very fortunate supply demand deficiency that was there that then pushed its prices about 19% up on its year-to-date performance.
Okay. Now on to Unki Mine. How relevant is the contribution of Unki to the performance of the group?
Well, Unki contributed about 86,000 ounces towards the production levels for Amplatz in terms of their platinum group metals. And with Unki providing about 86,000, that means that these guys are actually mentioned among the three top mines that they operate in, having had contributed a very good sum of money towards their revenues. So Unki being a part of that, it's a very good thing also for Zimbabwe, because we do realize that there is some good input that we could be getting from foreign currency earnings. Okay,
now let's talk about their performance, the performance of Unki particularly.
Yes.
Them operating in harsh economic conditions.
Yes.
We've seen a lot of miners closing their operations. We can talk about Riosm and issues to do with them getting the right amounts of foreign currency in order for them to stay in business. Why is it that while all the miners are complaining, Unki seems to be posting positives?
Well, I would like to cite maybe probably issues to do with them having very good support from their parent company, which is Amplatz.
Okay.
I'd like to believe that Amplatz does see a very good future in Zimbabwe, so they are not really holding back in terms of them actually investing in their in the Zimbabwean mine, which is Unki. And with that being said, we do realize that Unki also had a very good uptick in its production levels, which was almost north of 10% in terms of their production levels. So with them actually investing more and making sure that their equipment is up to date and making sure that they are operating very efficiently, this means that these guys are still actually producing 4 amplats in a very good manner, and are expecting the mine to produce far much more in the future when things do settle in terms of economic distress. Now, also, we could talk about the issue that Unki and the other platinum miners currently have only been exporting the ores rather than the more refined products of what they've been mining. So we could then have some sort of assumption that there had been some overestimation or underestimation of what they were actually producing here in Zimbabwe and what Amplats has been receiving. So for me to be crude on Amplats, there could have been some understatements in terms of what they've been receiving from Unki, which is something that could have been very much of a benefit to them.
Now, that therefore leads us to the next question. There is a $62 million processing plant which has just been completed. What does that mean for Unki going forward with that? Also, what could be the effect of such a facility on the other miners in the country?
Well, just to answer your last question quickly, because that will take a little bit. We look at the mining companies that are the platinum mining companies that are in Zimbabwe. You look at your Mimosa, you look at your Implats, and you also look at Unki. Now, Unki is owned by Amplats, and then Mimosa has about 50% of it is being owned by Amplats as well.
Okay.
And then Implats has its own, which is also being owned by the Implants parent company in South Africa. Okay. So now, 2 out of 3 of those are directly involved with Amplats, which is Unki and Mimosa, and
right.
and those two mining companies may somewhat end up using the same processing plant,
right.
Not knowing how much more related would Implats be in terms of the usage of that processing plant in terms of the relationship between Amplats and Implats. So it could be a very much good positive for Zimbabwe per se. Now, getting into the second question, which would be how are we going to really be benefiting out of that processing plant? Now, just to give you a little bit of history on the processing plant was much to do with a request by the local government for such miners to actually end up having refineries and processing plants situated in Zimbabwe, for them to actually have Zimbabwe move up the value chain rather than just mining ores and then exporting those ores. So now for Zimbabwe, it's going to be a very good positive for us, because there now is no escape of other added value, of other minerals that could actually be mined out of just mining platinum, because we do understand by PGM it means platinum group metals.
Right.
So we do have 4 elements that are within the ores that are mostly expected out of that, which are your gold, your palladium, your platinum, your rhodium, and the like. You also can find chromium and other minerals within those ores. So now with the processing plant there, we can then really start seeing how much of platinum are we actually mining, how much of palladium are we actually mining, how much of gold are we actually getting from mining platinum and the like. So now, with that being said, we then realize that there's going to be much more value that is going to be added to Zimbabwe via that. Now, on the end of Amplats, with the crude statement that I had made earlier on, it could be it could be a knock on their revenues, because then they would have to really be much more accountable in terms of what is actually being mined in Zimbabwe by Unki and by Mimosa. And that really then gives us differentiation between what was being mined then and what was being mined now. So we might actually see an increase in what we've actually been earning from platinum mining companies and what has actually been purported as of late.
Okay, and it's moving on to our next story. Zimbabwe is spending $200 million on imports of cooking oil raw materials per year. Now, we are coming from a base where back in 2000 we were producing 135,000 tons of soybean. Then 2017 we are producing just 50,000, and yet we have a demand of 350,000 tons per year. How do we get ourselves out of this mess?
All right, even for us to really see where we're coming from, for us to see where we can go, we need to understand where we're coming from. From 135,000 to 20,000, and then up back again to 50,000. Now, I can see that there's a little bit of appreciation between 2010 and 2017 about the problems that we faced in between 2000 and 2010. And some of the problems that we really faced were to do with mechanization in terms of irrigation systems. There, within that decade, there was a lot of issues concerning the issue of the drought that really hit Zimbabwe the hardest around this time. We were hitting temperatures of about 42 degrees Celsius on a day. I mean, it was ridiculous at that time. So now with the drought being there was no mechanization in terms of irrigation, how we could then spare the difference in terms of the water needed for the plant to actually grow and be very productive, for our yields to go up and the like. And there's a lot of people who actually came out of actually producing soya beans at that time, because there was not a lot of people that really understood the value that was within the product in itself. And so you would find that companies that would actually fund some of these farming projects, i.e., we can talk about Olive Industries, such companies then ended up going under. And by the time that they went under, funding for such farmers who were interested in farming soybeans then became much lower. And for farmers, they then found themselves in a place where they would rather go into something which is a little bit more profitable, which has certain which is more certain in terms of their incomes. I mean, you could look at maize production. That could have been one area that they could have gone into. Some into chickens and the like. We could mention a lot of sectors in farming, but then that gap between 2000 and 2010 was a huge issue in terms of technical know-how. Our infrastructure was not very good, and the like, and funding wasn't very much available. Yes, we do give leeway to other companies like URL, who have been there for decades on end, have been trying to support that industry, but then they were not as big as Olivin, because Olivin was pretty much the trademark of cooking oil. If you were thinking about cooking oil at that time, Olivin was the only name that could pop up in your head. So as much as when you think about toothpaste, it's Colgate.
Now, you did mention where we are coming from as well as where we are going. That being said, how then do we navigate ourselves out of this predicament?
Which is where I was now going, because I just had to give a little bit of context between the decade.
Fantastic.
Now, in the next decade, from 2010 coming up to 2020, where it seems as if things are bettering, we do have some sort of increase there. Now funding was beginning to come into play. Some people began to realize that there is value within producing soybeans for oil expressors. And now, as we near 2017, 2016, more companies were now funding projects to do with soybean farming. So now with such kind of funding coming in, there needs to be more and more injection of technical know-how and abilities in terms of farming that product per se. So going forward, you do find that companies like URL, I had mentioned that they were supportive very much in the past, but now it seems that they're stepping up their game in terms of how they would want to support that industry, because they do see that there's a lot of value that is being lost as a nation in terms of us importing soybean crude oils and other edible oils for us to produce cooking oil in Zimbabwe, versus us actually producing the soybeans and the like. So they have actually, I know of late, Mr. Moyo, who is the CEO of URL, actually approached the government and a couple of banks in terms of how they could actually attain a space of about 20,000 hectares where they could actually bring in farmers and give them contracts in terms of farming, in terms of actually producing soybeans, and also for them to be close to a good water source, for them not to then suffer in terms of drought, in times of droughts and the like. So that should push up our soybean production, and also an awareness for people to really understand the value that we could be getting out of this. Because I mean, there was an article that I read earlier on as I was just digging around the industry, where it mentioned how we had imported about 119 million worth of soybean raw materials and the like.
Right. That was 2016.
Yes, in 2016, and with that kind of investment in terms of importing, that could have actually pushed our production levels to 550,000. But then save to talk about the period from when we put the seed in the ground and when we can actually reap out of it. I would still then suggest that that estimation could be right, in the sense that we could then we could then spread out the 190 million dollars that was spent in importation and spread it across phases of actually improving our production levels in terms of soybeans. So if we need a lot of funding that is going to be going in there, and the guys at URL seem to be very much more vocal in terms of that right now.
Okay, because I'm thinking, look, we're grappling with a trade deficit of $2.5 billion for the year 2018,
Yes.
up from $1.7 billion in the year 2017. And we are bleeding this much, factoring in the fuel that we spend. We consume about $7.6 million on fuel imports on a daily basis. So my question is, how sustainable is it for us to continue on this path?
Well, it's not very sustainable, because as of late, oil expressors actually do require about $20 million dollars a month, and currently they had been receiving about $8.8 million, which is like a 66% deficit in terms of what they actually require for them to import. So this just shows how forex shortages are really tying a tighter noose around our necks as a country. Now,
Now,
yes.
let's talk about the effect of that where the companies are concerned, because I think there's been a much talk around the distribution of the forex in terms of the importation requirements for the different companies that we have across the board. How has these forex issues affected the sector?
Well, definitely they have affected them very negatively. I mean, you look at Surface Warmer, producers of Pure Drop. Those guys were pretty much almost spearheading the cooking oil industry right now in Zimbabwe, because they had also taken a part of olive and oil industries under their wing. So now with these guys have actually felt the pinch of foreign currency shortages, and they decided that for us to remain operable and very viable in terms of business, they would rather shut down their operations and actually take a step back and then wait for the right moment the right moment within the economy for us to actually talk about them being operationally profitable and them to keep on producing as much as they have been producing as of late.
Okay, what has been the cascading effect in terms of the consumer?
Well, the cascading effect has actually pushed some prices up currently, because you'd find that people are buying their cooking oil in excess of $4, $5 for some other oil products, and then say for other oil products that are being produced in Zimbabwe, like Royal. Those guys have been trying to really stay very considerate of the end user in terms of the amount that they should spend on their oils. But then I don't think it is going to be very sustainable for them to keep on selling their products at a very modest price. Now, why am I talking about increased prices yet we're talking about lower production levels? We do realize that in the last quarter of 2018, the SI 122 was actually lifted for a couple of months for us to be able to actually keep our supermarket shelves a little bit more full. So now that means that there's a lot of importation in terms of finished cooking oil products that are actually coming in. So we could say that in essence, the $20 million a month for cooking oil is very much modest, because that 20 million is only for raw materials. So we could talk about an excess of 20 million, maybe close to 30 million, not knowing exactly how much we are actually importing in terms of finished oil products that are coming within the country. So it is a very worrying figure. We should really be pushing for more soybean farmers. We should really be pushing for more technical know-how for our yields to go up as well, because we may have a lot of production, but then our yields per ton may not be very satisfactory for any farmer, who would then have to end up charging a premium for them to actually stay in business and reproduce their soybeans in the next farming season.
Okay, that was quite elaborate. Now, can you tell us how the stocks did perform today?
All right, even as we just have a look at today, we do see that on a 6-day range, there is a positive outturn for our all-share index, our industrials, and the top 10 index. Yes, on Friday basis, all-share index and industrials index are up 0.48% and 0.49%. I think that gap is slimming down as we are actually in a third week running in terms of the stock market coming off on a week-on-week basis. The top 10 index was up 0.3%, but then the minings index was still down 0.13% on a 6-day range. But then if we look at today's performance, the week did start on a very damp perspective in terms of the all-share index coming off 0.31%, so as the industrials index following suit, for both of these indexes to settle at 151.21 points and 504.33 points. Now, the top 10 index was a little bit more modest in terms of its losses, as it was more leading in the previous week. I think it's something that is of note. I think the bear run actually within the top 10 index is coming to a slowdown. Maybe as we continue into the week, or maybe in the weeks following, we might begin to see an uptick in these stocks. But we do see that Delta and Cassava are two of the top 10 stocks that did come off today, letting up about 1.68 and 0.25% for Delta and Cassava. I think that has much to do with the disinvesting that we talked about. Old Mutual did come up 0.07% for the disinvesting movement that foreign investors have been going on about. Padenga still leading the year-to-date progress in terms of it going up 29.41%. It actually was one of the top 5 risers for the day, coming up 4.66%. If we just look at our top 5 risers, it was actually leading that pack, as we had 7 counters coming up and 7 counters coming off, with a total of about 16 counters trading on the stock market, if I'm not very much mistaken on my number there. But then with Simbisa and Econet coming up 1.33% and 1.04%. Mash Holdings and Dawn Properties are two property concerned stocks that are on the stock market. These guys did come off 19.25% and 9.75%, which is somewhat a little bit worrying in terms of the properties market. I would really want to find out what was most of the driving effect for properties to actually lead the pack of bears today.
Okay, thank you, Anesu. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. From Anesu and I, thank you and leave.